Spring has sprung, the first quarter is behind us. Hey guys, Jeff Bonk here with the HBB Group in Hoboken. And I want to take some time today. I got my spring wardrobe ready for nice weather. And we want to give you a quick market update on what happened in the first quarter of the Hoboken Real Estate Market in 5 points. Give you some information, some statistics, but also give you some context of what that really means once you dig underneath that if you are looking to buy or sell real estate the remainder of this year. So come along, we're going to talk about 5 quick things that I think is important for you to know if you're going to be buying, selling, renting, or investing here in Hoboken in 2023. Number 1. First thing we want to take a look at is how many properties went under contract this quarter, first quarter of 2023 versus first quarter of 2022. This is how many buyers and sellers came to an agreement and agreed to seller to sell the buyer the property. This is a really good thing to look at because it tells us the health of the market, how many transactions are happening, how many buyers are willing to step up to the plate, and how many sellers are willing to sell for those same numbers. Last year, we saw 299 properties go under contract in Hoboken in the first quarter. This year, we were down to 154. Now, that sounds like maybe the market's softening a little bit, maybe that the buyers are not willing to pay the prices the sellers want. We'll get into some of these next points, which I think will clear that up a little bit and show you how we can't just look at top line numbers. We need to really see what's underneath them and what's driving them to really understand what's going on in the local market. Point number 2, we're going to look at how many listings actually came on the market. Now, in point 1, we saw there was less transactions, but the real reason for that is there was way less listings that came on the market. In quarter 1 of last year, we saw almost 450 properties come on the market actively listed for sale in Hoboken. This year, we were down to only about 240, 245 properties that came on the market actively for sale. So although it looks like less buyers are willing to purchase in these markets, it's really, there's not enough properties for them to go look at. We're seeing right now in all of our listings and with all of our buyers, anywhere from 1 full price offer in the first week, all the way up to 20, 25, even 30 offers on some properties that are below the median price point typically, priced for a little bit of a bidding war, but still 30 people willing to step up. So when we look at how many listings came on and how many things went under contract, we really start to see a picture that's painted a little bit more that maybe the real reason is there's not enough sellers in the market and not enough buyers, which might be the first thing you think when you see less transactions happening this year versus last. Let's take a look at number 3. So point number 3. Interest rates. Yes, the thing you've been hearing about in the news for the last 12, 18 months. Interest rates are going up. Interest rates came back down a little bit. They're back up. Interest rates are 100% driving this market. And it does have a big effect on the buyer's willingness to step up to the plate and purchase a property. For every 1 point interest rates go up, 5 million people drop out of the buyer pool, right? That's a big deal. For every 1 point interest rates go up, a $700,000 loan goes up by $400 a month on average. Right? These are big things that definitely take buyers out a little bit. But what I think a lot of people don't see, it's taking sellers out of the market. Imagine you bought a house in the last 5 years, you probably have an interest rate around 3%, maybe 4% max. Now, are you really motivated to put that house on the market and go buy a new home at a 6.5% interest rate? Not so much. And that's really why we're seeing so much less inventory in this market. And it's still a seller's market. I talked about in point number 2. 2, 4, 5, 10, 20 offers on a property. That's because there's just not enough sellers that are willing to sell their property. Now we're starting to see in the last few weeks that's starting to loosen up a little bit. We're usually seeing 10, 15, 20 listings a week come on in Hoboken. Luckily, the last few weeks, we've seen 20, 25, 30 come on, starting to loosen up into the spring. As interest rates came back down, they were up around 7 for a lot of this quarter. They're back around 6.25, hopefully trending towards 6. And that's going to start to loosen the market up and become more of a neutral market and less of this seller's market that we're seeing now. Point number 4. Pricing. We're going to talk about price per square foot for a second here. Now, we talked a lot about supply, demand, activity, but what really matters to a lot of people, sellers and buyers, is pricing. Last year in the first quarter, we saw $788 a foot was the average price for a Hoboken condo or townhome. This quarter, first quarter, we saw $781. Yes, that dropped, right? With all the supply and demand, all the sellers market that we talked about, how many buyers are lining up, why did pricing go down? Was it interest rates? Maybe, we got to dig in, but maybe not. When we look at it, 20% of the homes sold last year in the first quarter were luxury doorman building homes. This quarter, there were no sellers in those buildings. It was down to 5%. So if we just look at the average across the board, we're going to get the wrong story. We're going to get the wrong picture. When we compare apples to apples, when we compare walk-ups to walk-ups, townhomes to townhomes, elevator building to elevator building, we're actually looking about 13% up year over year, first quarter from last year to first quarter of this year. This is so important to make sure you just don't look at high-level topical numbers. You don't go to Zillow and look at some numbers, Realtor.com, and just see what the trends are looking at from a computer algorithm. We need to dig in, we need to go deeper, and this is something that a lot of people come with agents from outside of our market. They're like, oh, well, the market's down, interest rates are up, it's a buyer's market. No, guys. In the micro markets that we look at here, it's a different story. So make sure you really understand what's underneath so you can make educated decisions when buying a property in any local town. Number 5, let's take a quick second to talk about the rental market. There's been a lot of national headlines where rental markets are starting to soften around the country. Not here though. Last year, we saw about 380 rental transactions in the first quarter, 10 days on the market, which is essentially the first week they get multiple applications, and an average price of around $3,100. This year, we actually saw that number go down on the volume, the amount of rentals. We saw it go down to 280, so just less that were available. We saw price go up to about $3,500, and the same 10 days on the market. In the first week or so on the market, the rental was gone. Now, the reason for this, I think, is people that want to buy, there's no inventory to buy, as we talked about so far in this video. So they have to rent. They rent. There's 2-3 people that have to find a place because they have to move out of their other place and they're bidding up places. So there's just not enough inventory. The people that want to move to the suburbs maybe can't do that because there's no inventory there, therefore creating less rental supply, less seller supply, and just driving both markets up at the same time. So it's really important to know what pricing is for different types of properties, especially for an investor as well. If you're looking to invest money somewhere, you need to know that the rental prices just went up 10-15% last year in that market, right? That's going to change your numbers, change the dynamics of your decision making there. So it's always important not just to look at the buyer market, just not to look at the rental market, but to look at them in conjunction and see how they play and tie together. That's it, guys. I hope this was helpful. I hope this gave you some good context, some good information that helps you drive your decisions going into the rest of 2023 and into 2024. The market is definitely challenging. It's not an easy market to be a buyer or a renter in, but if you sit down, you have a plan, if you make sure you're educated on what's going on, what the dynamics are, and have a strategy to succeed, you can definitely find the right rental or the right purchase. If you're a seller, make sure you know what your options and what your flexibility is. A lot of sellers we talk to read the headlines about high interest rates and housing markets softening the rest of the country, and they may not know they could actually get 15 or 20% more than what they might just think. They might not know that they can most likely rent the place back from the buyer for 3 or 4 months because there'll be so many offers that they have a choice to really drive the term. So make sure you have the knowledge, make sure you have the right information. If you want to talk about your personal situation, feel free to reach out to us, to one of our advisors. We're always happy to work with you one-on-one and figure out a strategy for you, and we'll see you on the next one.